For more on the airline industry, we bring in Seth Kaplan of Airline Weekly. He joins us from Fort Lauderdale, Florida. So, Seth, you heard what Anderson said about the currency risks, headwinds out there for Delta and presumably for other airlines. Do we extrapolate that other airlines face those same challenges, but Delta is in a better position to fend them off?
They do. Now, keep in mind that the currency situation also has one enormous benefit. The strong dollar is tied to cheap oil prices. And so, for a U.S.-based airline, even an airline like Delta, as global as it is, the majority of its business is still domestic U.S., it will take that trade-off of these much cheaper fuel prices in exchange for, some consumer spending issues abroad. And basically, the degree of exposure to those markets abroad relative to domestic kind of tells you where each airline sits. An airline like Southwest, which is nearly all domestic, for example, gets all the benefit of cheaper fuel without those currency issues abroad. But Delta is doing a very good job, sort of being nimble and reallocating assets. Anderson talked about that during the call, that, these are not factories. It's not a hotel in Manhattan where you can't move it if the market deteriorates in one place.
But of course, lower fuel prices benefit is going to come to an end. Even if oil prices stabilize at these lower levels, we are not going to see another 50% slide. So how much better does growth have to be for it to make up for the loss of the benefit of low fuel prices?
Yeah, and that's the key question. Delta still has a little bit of a tailwind because they were rather heavily hedged at high fuel prices. So they basically have these wrong way hedges that are still wearing off, whereas an unhedged airline like American kind of already got all the benefit. And so if fuel stays rather steady, they won't get much more benefit going forward. But no question, Delta is seeing these unit revenue declines, as are most airlines, and they had hoped to basically stabilize that by the end of the year. And they conceded on the call today that that's not going to happen exactly like that. So it's a race to the bottom between falling fuel prices, that's good for airlines, and falling airfares, that's bad for airlines. So far, falling fuel has been winning, but they are going to have to get their hands around these falling unit revenues at some point.
And Seth, you recently published a list of the world's most profitable airlines by measuring the operating profit margins. What were you surprised to learn?
Yeah, well, one thing that's no surprise, because it's kind of a continuation of recent trends, is that the ultra low-cost carriers, those airlines that people kind of love to hate, Allegiant, Spirit, Ryanair in Europe, still near the top of the list. But, you see an airline like Southwest that in recent years had kind of struggled, maybe lost its luster. They're up there in the top 10 in the world, too. Alaska Airlines remaining very profitable. So really, it shows there's more than one way to make money in the airline industry. American, by the way, very impressive that, rather early in its post-merger life and really just this weekend going to complete a big part of the integration, already in the top 10 in the world by operating profit margin, together with U.S. Airways, with which, of course, it merged.
That was staggering to me, because Spirit is like the airline that I hate the most in the entire world, and it was number 2 on Seth's list. And the second airline I really hate is Frontier. And yes, it's not publicly traded, but it does have really good operating margins. Its profits are pretty great. Do we expect maybe an IPO in the future due to the fact that it's kind of killing it right now?
Yeah, that's the big question. I think a lot of people haven't noticed Frontier because, they don't publish earnings, they don't have earnings calls and so forth, they don't trade. People kind of don't notice that here's an airline that's right up there with the most profitable in the world, backed by the same investment firm that backed the conversion to an ultra low-cost carrier at Spirit, which pulled off, of course, a very successful IPO. Still kind of early in the cycle there to expect an IPO, but they're doing this well. There's investor appetite for airline shares, so who knows? Because yes, they're doing really well, and that whole anyway, apparently like really low fares more than they hate the things they don't like about those airlines. Although, again, other full-service airlines manage to do rather well, too.
All right, Seth Kaplan, thank you so much. Seth Kaplan of Airline Weekly joining us from Fort Lauderdale.